Hello, thanks for joining me today. We're going to talk about AI speculation and why it is concerning. It's also very interesting. Everyone's talking about AI right now because it's such a big driver in our economy with all the hyperscaling that's going on, and it's having interesting effects on the stock market. So, before we dive into that, let's just look at the environment, um, starting with the consumers, because that's where we have to generate revenue from. Businesses, governments, and consumers like you and I paying $20 a month for Chat GPT, they have to drive revenue. And then we're buying products from a variety of AI companies, OpenAI, Anthropic, Google, Meta, etc. Just to give you an example, the first one on the far left, OpenAI made 13.7 billion in 2025 in revenues off of consumers and businesses, and they're expected to make 25 billion in 2026. So, almost 100% growth in revenue. That's amazing. But they're still underwater. They still are losing money any year, every year, and they have more and more competition. So, for example, in 2026, they lost $24 billion, and they do not expect to be profitable for another few years, even with their amazing growth. So they won't be profitable until 2029 or 2030, and that's if things go well. So they're making huge investments um, and hoping that it pays off with consumer revenue growth. And they're not the only ones that are making huge investments. The biggest companies um, with capital expenditures, the five largest are Amazon, Alphabet, Microsoft, Meta, and Oracle. They're spending about 690 to 700 billion dollars in AI capital this year. So that's amazing. That's so huge. The annual GDP comparison. This is roughly the GDP of a small country and exceeds the entire U.S. energy sector's annual capital investment by a factor of four times bigger than our U.S. energy sector. Over 60% of this spending is on power, infrastructure, cooling, and data center construction, not just GPUs. So that's where a lot of the money is flowing down into this lower level. So we have, of course, the cloud platform providers, but a lot of the money right now is flowing down to these AI hardware and infrastructure folks, the data center folks, the materials that it takes to build out a data center. So long-term trend, the cumulative AI infrastructure investment from the big five is expected to reach $1.15 trillion between 2025 and 2027, nearly triple what was spent between 22 and 24. That's amazing. That's why it's so interesting. And it's the question is, will we be able to generate enough revenue from the consumers to cover all of this investment? And it's also complicated because the companies on this slide are investing in each other. So, for example, Microsoft invests in OpenAI. OpenAI turns around and rents Azure Compute. So the dollars aren't coming from consumers; it's bouncing between the companies. And similarly, Amazon invests in Anthropic. Anthropic commits billions of dollars to AWS to host all of their computers. So another example of where the money is not coming from outside this circle yet, and that's where it needs to come from. Um, so let's why is this potentially an issue on the stock market? Well, one, because a market correction doesn't require these companies to fail. A correction can often begin when a small number of high valued companies experience valuation compression. So that just basically means that the market says, we're currently paying 20 times your forward earnings, and we don't think that that's realistic anymore. Based on the competition, based on the environment, based on how much money you're spending and how you're not going to make money very soon, they may say, we think we should only be spending 13 times your forward earnings. And then the stock corrects. And if several stocks correct, then you could see a compounding effect on the market. So on this side, we we have the 10 largest companies, and you can see their forward PEs. So that's just saying, if you look at their forward earnings per share, or what the analysts predict their earnings are going to be in the coming year, what does that mean the stock price is trading at? Is it 19 times your forward earnings like NVIDIA? And NVIDIA, that's not super high. It's a little bit lower than the S&P as a whole. And that's because they have incredible estimates for future earnings. The analysts are predicting that their earnings are very high. So that's why that seems reasonably priced. But then you look at Microsoft and it climbs a little bit. Apple climbs a little bit more. Apple has a long history of creativity and creating returns for their investors, and that's why it's higher. Alphabet, 29. That seems high given the expenditures they're making. Same with Amazon, 29 seems high given their expenditures. Meta is only 18. But then you look at the three on the bottom, Broadstone, Tesla, Palantir, all very, very high. So they're definitely trading at a premium. So I guess what I'm saying is that it's risky. It's concerning because the valuation of those 10 companies, the 10 largest companies, are responsible for 38% of the S&P value and over 40% of the NASDAQ value. So if those 10 companies have compression, valuation compression, it could spook the whole market. Just so that there's 490 other companies that make up the other 60%, but those 490 other companies can be spooked by these 10 largest ones that can have an outsized impact on the S&P and the NASDAQ because those index values are based on the size of the company. So they can spook the entire market. So that's why this whole AI connection and valuation is so interesting. And if we don't see revenues continue to climb for the AI companies by high double digits, somewhere between 50 and 20%, then the markets might be like, well, it's not growing at the pace that is going to sustain the investments, and we'll start to see corrections. And we've already been talking about the overall market vulnerability and how it's entering the extreme territory. And this takes into account a lot of things, not just valuations. And if you want to hear more about that, just look at any of our other videos in this channel. And this is where we evaluate the overall vulnerability of the market on a regular basis. Thanks for watching, and please join me as we look forward to other events. Starting tomorrow, we have the inflation numbers coming out, which will be really interesting. And it'll be fun to track that and see what impact that has on our vulnerability. Thanks.